Today, I want to talk about how the SEC is about to ban synthetic short selling. They're already considering and just about to implement a complete all-out ban on the short selling of bank stocks, and I do hope they extend this ban to other stocks in the wider market, like tech stocks and meme stocks, for example. So stay tuned and let's make some money. And now to dive straight in with the key information. So, Pick tweeted an exclusive. US officials are assessing possible manipulation on banking shares. It says increased short selling activity and volatility in shares have drawn increasing scrutiny by federal and state officials and regulators in recent days. And the source has said that many of these banks in the sector have strong fundamentals and sufficient capital levels. Now, Dave Lau has asked, saying, does anyone think that it's far-fetched to assume that bad actors could or would attack the US financial system through market manipulation? Obviously, they've already done this with tons of stocks in the past, spreading from tech stocks to meme stocks and everything in between, pushing the prices of the bank stocks down to cause a feedback loop of uncertainty and reduce confidence further, again causing prices to fall even further. Effectively, the shorts aren't caring about anyone but themselves. They just want to push these bank stocks down further so they can make more profit on their trades. They don't care who gets hurt in the process or even if banks collapse, just like they don't care when shorting tech stocks or shorting meme stocks either. As Jan-Jack tweeted, he said that naked short sellers are hovering over regional and community banks, checking for signs of distress, ready to swoop down on them and tear their guts out, just like they did to Lehman Brothers. You may remember in the past I've played a video of Richard Fuld, the past CEO of Lehman Brothers, talking about how his stock was naked shorted into the ground. He said that Lehman Brothers could have potentially raised capital during that banking crisis and could have potentially survived. But the short sellers continued to push his stock price down further and naked shorts came out in an abundance. Again, I've gone through an article in the past before as well that spoke about how Lehman Brothers in one singular day saw over 40 million FTDs in one day and over 60 million FTDs in another day. Now, those FTD numbers are unheard of for meme stocks, let alone for big major banks. As Jan-Jack tweeted, he said, Gary Gensler, retail investors have for a long time requested the SEC to monitor naked short seller activity in the meme stocks, but you've left them unsupervised and allowed them to profit from abusing our companies. But now all of a sudden Gary Gensler is changing tune and wants to ban short selling altogether, let alone banning naked short selling, but he wants to ban short selling altogether for these corrupt bankers. But he's added saying that it's not too late to do the right thing. Apply that naked short selling ban not just to the banks but to AMC, GameStop and other meme stocks as well. And it seems that as of this morning, US bankers are already urging the SEC to start probing short sellers to reduce abusive trading. And Jan-Jack said, let's all see how quickly Gary Gensler acts to expedite the implementation of a new rule regarding the naked short selling of banks by hordes of naked short sellers. Obviously, so far it's been well over 2 years and Gary Gensler has done absolutely nothing about the naked short selling of meme stocks like AMC and GameStop. I hope that it takes Gary Gensler at least 2 years to ban short selling on these bank stocks, but something tells me it's going to be a lot less than 2 years for him to act, likely less than 2 days. He says, Gary, you can't make up special rules to protect banks only. You must do it to protect every important business, including tech stocks, including AMC, GameStop and other meme stocks, and all stocks in the market really. There can't and there shouldn't really just be one rule for them and another rule for everyone else. It's not fair that banks can escape short selling, but other companies in the market like pharmaceutical companies, tech companies and everything else in between gets a different rule entirely. Maybe Gary Gensler will turn around and say, nope, there's not going to be a ban on short selling for any company in the market at all. Not for the banks, not for tech companies, not for pharmaceutical companies or anyone else. Or maybe Gary will do the right thing and ban short selling not just on banks but for all companies as well. Or at least ban synthetic short selling if he's not banning short selling altogether. Guys, be sure to sign up to Moomoo, the sponsor of today's video, by signing up using the link in the description below. You can currently receive up to a whopping 15 free shares, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use and it's very clear and concise. AMC also has excellent charting tools, free 24/7 customer service, and you can also trade around the clock with the full extended trading hours. And now what's even crazier is Jim Cramer has tweeted saying if the FDIC was not clueless and knew nothing, then they could create a short squeeze of a lifetime. But they're playing Ivy League and the short sellers are playing the SEC. He said, will they step up or are they pitiful walk-ons? He said, I will propose a plan later on tonight's Mad Money episode. And as Spence tweeted, he said it's crazy that Jim Cramer is talking about purposefully enacting short squeezes. After years of talking down on GameStop and AMC, he's now perfectly happy to short squeeze bank stocks instead. He's gone from saying that short squeezes are terrible and that AMC and GameStop should effectively be monitored for retail manipulation, then all of a sudden saying that short squeezes are absolutely brilliant and we should short squeeze the short sellers of these banks. As Spence has highlighted, it's likely that his bank bags are piled up high and he's desperately trying to influence the regulators to cause a short squeeze on the stocks that he's holding, not that he's shorting. Jim is obviously very long on these banks and wants these banks to survive and thrive and is therefore desperate for a banking short squeeze, but not for a meme stock short squeeze. Again, as I said, it's so corrupt that it seems to be one rule for us and another rule entirely for them. But it seems the tide may indeed be changing. Check out this tweet from InvestorTurf. They've said Brett Fairclough, the co-president and co-COO of Virtu Financial, has recently sold off 57% of his holdings in the company. Clearly this co-president knows something that we don't about Virtu Financial and he's willing to bail out of half his entire shareholding. But what makes this even more interesting is that he hasn't done this when the Virtu stock is at an all-time high, because so far their stock is down over 40% in the last year. The stock is also down over 15% in just the last 5 days, and this co-president and co-COO is bailing out of half his position practically at the bottom. He's obviously worried about the future survival and future health of Virtu Financial, and therefore clearly knows something that nobody else knows. Maybe Virtu is either just about to go bankrupt or is just about to be caught by the SEC for all of this synthetic short selling. It's likely the same players that are synthetically short selling AMC are also synthetically short selling the banks as well, and therefore it's likely that all of these short sellers are about to end up in very big trouble. But I also wanted to quickly touch on and talk about this tweet from the Masked Investor about AMC's first quarter results. We can see that total revenues at AMC grew 21% up to $954 million in one singular quarter. The net loss also improved by $100 million to only $235 million. That basically suggests that in maybe 1 or 2 more quarters, AMC will be profit generative. On top of that, the adjusted EBITDA improved by $68.8 million to a positive $7.1 million. That means that basically on a gross profit basis or on an EBITDA basis, AMC is actually profitable. The only thing that's making AMC loss-making at the moment is taxes and interest and depreciation and amortization, which doesn't really exist. Because if you didn't already know, EBITDA stands for earnings before interest, tax, depreciation and amortization. So basically the only thing that's stopping AMC from becoming profitable right now is this interest figure, which is obviously the interest that they're paying on the debt. That very same debt that Adam Aaron is just about to clear by paying off all remaining bonds and all remaining loans. Adam Aaron obviously has this huge cash position that he does want to put to work and is therefore likely to use that cash to pay down those loans. On top of that, AMC's cash burn for the quarter has also improved by about $100 million, down from $220 million to only $139 million. So again, in 1 more quarter, maybe 2 more quarters at the max, AMC will not only be profit generative, but also cash generative as well. Considering that AMC has $700 million in cash and a cash burn of only $139 million that is decreasing and will likely become cash generative in the next quarter, it's therefore likely that Adam Aaron doesn't need to issue any more shares and dilute AMC any further. He already has tons of cash. Especially as AMC is improving as a business alongside and is just about to become cash and profit generative in the next 1 to 2 quarters. Especially because quarter 2 and quarter 3, those summer months, tend to be the best months for AMC and the best months for the box office. Most of these big upcoming films are releasing in April, May, June and July, and therefore the next 2 quarters for AMC are going to be brilliant. As I said, I do hope that Gary Gensler extends this short selling ban not just to the banks but to all stocks in the entire market, or at least bans synthetic short selling properly. But even if he doesn't, AMC is succeeding as a company, it's growing, and it will very shortly become profitable. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!